All right, welcome guys. It's Nick with marketmakersmethod.com, and I'm here to bring you our lesson on candlestick patterns. So I know I talked about them a lot. Candlestick patterns, you probably know about them if you're a little bit familiar with Forex and trading. If you're completely brand new, that's all right. And we're gonna basically dive into candlestick patterns, and I'll let you in on a secret. Even though you learn about reversal candlestick patterns, continuations. Candlestick patterns basically are useless if they are not seen in the right market conditions in the right time of the day. Okay, so identify these candlestick patterns in the wrong market condition, they are completely meaningless. Okay, so I'll go into that. Certain candlesticks at the low of the day, high of the day, as follows. We have spike candles, we have spinning tops, doji candles, railroad tracks, high test, low test candles, morning stars, evening stars, and vector candles. So those are just some of the most common type of candlesticks that will occur when we see our M and W formations. And like I said, these are only useful when they are in the right time, right, during London or New York stop hunt. That's when they are only effective. Otherwise, they're meaningless. So let's kind of go into this a little bit here. So right here, this right here is our tweezer tops. This is when two pins are basically the same level, and they reject both off of like that. And then they can be kind of like a, like a spinning top or bearish top right here, where it's a small body and two tweezers like that. Now, let me move this over here, down here. Okay, these are our railroad tracks, not railway tracks, they're called railroad tracks. And this is when we have a complete embody of this candle. So if this candle is bullish, then the next candle completely closes all the way below this candle. So this is a railroad track right here. This can be both to the vice versa. It can be first a big bearish candle. That's my bearish candle right there. I'm a great artist. Let me actually make this. Okay, you understand that. That is a bearish candle. And then it's a bearish candle. And then I'm going to now, let's say this one has a nice little wick. And this one closes like this. And that's my bullish candle. Wow, it's amazing. Sorry about that, guys. So that's my bullish candle, and it closes. It could either close above, which is even stronger confirmation. That's a bullish engulfing railroad track, right? It closes above this candle, or it could close slightly below it as well. That's still fine as long as it has this characteristic right here. That's a railroad track. Let me clear everything here. These are spinning tops and spinning bottoms, simply a small body, and we have two long wicks to either side. Evening star pattern, we basically have small gap up, small gap down right here. We have a little bit of space in between. Doesn't really have to be too much space, but most importantly, what we have is this characteristic of a bullish candle. Then we have a small little doji here, or spinning top, and then we have a nice bearish candle to close. And the same thing for a morning star, it's just the opposite, right? We have nice bearish candle to the downside, and then we have a, look at this, this is kind of like a small little hammer doji, small body, and then we have a nice bullish candle to close in above it. That's a morning star and evening star. Then we have a hammer. Hammers are quite common as well, with this nice short little body. Then we have just a long pin to the downside. And if this was a, this is a bullish hammer, and this is a bearish hammer, of course. And then dojis are basically where price will open and close exactly at the same price and almost form exactly no body length to it. So it's just kind of price opens here and it closes here. Okay, so this is kind of the most common candlesticks that we'll see. And like I said, these candlesticks are very useful because we're going to see them in the M. We're going to see them in the M and W formations. And when we use them with the right context and everything that I teach about the stop hunt with the weekly cycle, this is where you're going to be able to determine your entry points and understanding the candlesticks like this. Okay, so without further ado, let me show you some examples. Okay, so first candle right here this is a doji right here. There's a doji, and then we have a nice bullish hammer right here to give us that second leg, and they pin down, grab the orders just below the first leg, grab any pending orders that they had there, hit the stops a little bit. And as you can see, this does happen at 2:30 a.m. EST, which is a good time to actually trade. It's a stop hunt. Look at your TDI as well. TDI is showing, TDI right here is showing that it comes here, back to the volatility band, and there we go. Signal line cross, and we have our EMA cross right there, and our EMA close above. And our first take profit would be our mayonnaise. Okay. So now let's move on to the next one. Okay. Let me clear up those drawings there. All right. So first, let's identify this. Look, peak formation, shoulder, head, shoulder. 1 hour time frame probably identifies that a lot easier. What we expect here is stop hunt, low rise. Well, we didn't quite get a stop hunt to our box like we expected to, but what we did get is this bearish hammer that occurred, but it picked up the orders as a second leg. Look at TDI. First leg, shark fin off the market baseline. Second leg, again, tapping off the market baseline, and there we go. EMA's crossed over there. Price closes above 5 and 13 EMAs, and we're off. Okay. All right, here's another doji candles. It occurs at 4:30 a.m. EST, right at our stop hunt box. I mean, come on, it gives us these two perfect doji candles. Look at that, nice like 4 pins to the upside. This is definitely going short. Market makers grabbing orders. They're taking their time right here with the M formation. And the M formation takes about an hour and a half to complete here. We have kind of our our first leg here, 15:30, 45 hour, 15:30, about an hour, 30 minutes to completely form right there. With the M formations, W formations, if basically I'll show you the timing element with the M and W formations. There's a little bit of a way to look at them, but other than that, you see everything else here. TDI, time also been back inside 68, 63 at the extreme level, and our take profit is going to be the 50, the water, and then the 200 EMA, which is the mayonnaise. Okay, so okay, so coming here, look at this. This is New York session. This is going to be kind of the latest that you would be able to take a trade. This is like halfway through New York session, but what we did have is a lot of confluences here. With that being said, look at TDI. We have TDI coming here, and I'll take this. So we do have the TDI outside the volatility band, closes back inside second leg, but we have a pin to the blueberry, pin to the blueberry. Second leg is a railroad track. You see that railroad track entry, and it pins it twice to the 200 to the 800 EMA, and that completes our W formation. We target these two EMAs, and then of course we can hold it with our stop loss and break even. Stop loss goes 20 pips below the pin, and we go to the upside. This wasn't the best trade, didn't go right into profit. Like I said, it's a little late New York session, but if you held, then it would have paid off quite well, as you can see. Right, here we have right at the beginning of the New York session. This is at 11 a.m. Eastern Standard Time, and we have a railroad track engulfing candle, and this shows you quite well how this actually M formation did not pay off at all. We had the rejection off the 50 EMA, came back here, extended the stop hunt, and here we have our engulfing to the downside. EMA is crossed over, And this was a great trade that would have paid off if you took this at the 50, 200 EMA and possibly hold with stop loss at break even or in profit. Okay, so this does it for candlestick patterns. There's really not much to really learn about candlestick patterns other than understanding which, knowing the candlestick patterns, which I kind of gave you that slide. You can pause, you can print it out. You can also, go through the history, and as long as you use the candlestick patterns in confluence with the M and W formations at the right timing, the stop hunt, the vector candles, then you should be good to go. And it's good to understand the candlestick patterns. And it's quite powerful. Okay, so that will be it for the candlestick patterns. And I'll see you in the next lesson. Thank you.